Hi guys, Greg Secker here in the Trading Den. Well, today, amidst COVID-19 lockdown, I'm going to be teaching you one of my most cleverest, deep-seated secret signals that most amateur traders never hear about. It's called the INTERBANK RADAR, and it is a strategy which exposes hidden signals buried deep within charts that the untrained eye would simply miss. It's looking at the divergence, which means a difference of movement between price and the oscillator or the stochastic oscillator indicator. In other words, it's showing you the actual strategy itself where selling pressure is building up that you would not see on a normal chart, and therefore a big drop is imminent. And it also shows you buying pressure that's building up, again, that you wouldn't see on a normal chart, which tells you a bullish rally itself is imminent. Whilst you've got nothing better to do than just train that brain up, get your skills online, get yourself using these strategies because the markets are moving wildly, this is going to be a great time to embody and embrace this incredible trading strategy. It is called the INTERBANK RADAR, and we're going to be learning that right here, right now. So let's get straight into this. The INTERBANK RADAR looks at a divergence, which means a movement of price of the indicator in the exact opposite direction to the movement of price itself. Best way to show you that, of course, is looking at an example. So let's jump straight into an example, very popular on stock indices and commodities. In fact, we just launched a new program or a new course of the stock indices and commodities program on Smart Charts. So for those of you who are subscribed to Smart Charts, go and have a look. It's all there and readily available for you to access. It's called the Stock Indices and Commodities Program. Now, stock indices, so you're obviously aware of what the stock indices are. That's the FTSE 100, that's the DAX, Germany, that's the Dow, that's the CAC in France, it's the Hong Kong, which we're going to look at in a minute. These are the major stock indices. They're a grouping of some of the major stocks in those countries, and it creates an index price. We all know very much what's been happening to the major stock indices around the world and how that's completely changed the nature of the way we live and work at this present time. And of course, it's changed the nature of course what's happening to those constituent companies in those major stock profiles on the stock indices themselves. So things have really changed radically. That means there's incredible volatility out there. So whilst you are locked down at home, maybe switch off the Netflix for a while and learn this little tool, because this is a real moneymaker. There isn't hundreds of signals, but when there is a signal, the probability of success is extraordinarily higher because you're using some really clever maths here to ensure that the predictions you're making are as accurate as they possibly can be. Add a touch of volatility, which of course is what the markets have today, and I think you've got yourself a really powerful tool. So my YouTube subscriber friends, I hope you love this video because it has been caringly made from yours truly in the Trading Den, and I want you to absorb all of it because it is a tool, I promise you, in your arsenal that you could do very, very little wrong with. This is a tool which can certainly add dollars and pounds to your bank account. So let's get into this right now, and I'm going to jump onto Smart Charts, and you'll see I've basically got my screen kind of laid out in three window formats. I'm looking at the daily in the top left-hand corner, always showing a 200 period exponential moving average, just to show us what's going on. We can see the Hong Kong 50 is below that it's below that 200 period moving average, showing some weakness, which we know. We then look at it over the 1 hour, so we can see what's been happening, and we know it's been tracing up a little bit over the 1 hour, sort of regaining a little bit. But most importantly, it's then looking at that INTERBANK RADAR screen. So I'm going to show you how you access that by bringing up my trading screen, which of course is that third panel I'm going to use in Smart Charts. Let me bring that one up. This is how you access it. You click on the strategies button. You scroll across past your other strategies until you get to, of course, the INTERBANK RADAR. And here we are, INTERBANK RADAR, and it's flashing Hong Kong 50. I'm going to jump into that. And here's what I want to draw your attention to first and foremost. Now, you will notice the stochastic oscillator with the settings 833 on a simple moving average setting. That is the default standard setting for the INTERBANK RADAR. And look at two things here, but separately. So first of all, we're going to look at the trend of the indicators. Let me just jump into the indicator and let's see if we can draw ourselves a very simple trend line for what's been happening in recent times. So let's grab our trend tool, trend lines, trend line here. That's all native to Smart Charts. And we can certainly see there is our trend. So we're in a nice downtrend. And if you remember from previous videos, that concept of phase one and phase two, I'm going to bang on about phase one and phase two probably throughout the rest of all of the videos I ever talk about, because it is so critically important that you absorb this content. The concept that when markets move consistent with the trend, in other words, if markets are moving up and the trend is up, that is phase one. If markets then turn and pull back, that's phase two. And then when phase two ends and phase one resumes, again, you're back in phase one and you're moving with the trend. That works for uptrends, and of course it works for downtrends. We're looking at a market in a downtrend, or more importantly, a stock indice in a downtrend. And if you look at my chart here, then we can see that phase one, then that phase two movement. Remember, phase two is price moving against the trend, back up to the trend. And you'll see that we are on an interbank radar. As you see top right-hand corner there, it says I radar, which stands for interbank radar, which shows you movements happening interbank is the premise, where when deep buried movements happen in charts that you don't see with the eye, it suggests interbank activity, hence why it's called the interbank radar. So this is phase one moving with the trend, moving down, phase two moving up, and you'll see that historically, and we're going back into February at this point, there was an interbank radar trade called just at this point there. And that, of course, was a successful trade. Then we go big phase one movement, big phase two back, and the big phase two movement back to the original downtrend is calling with a blue arrow another interbank radar. That's that buried, hidden secret signal in the chart, which is saying, look, there's a sell bearish trade coming off here, and you should be aware of it. Now, what does this, if I now look at the indicator, you'll see the trend of the indicator. If I go back to my trend line tool and I hit trend line, then we'll see the trend of the indicator is certainly, if you look at the troughs, in the opposite direction. So you can see they're both moving in opposite directions. It's a bearish divergence. This is what bearish divergence means. It means the indicator trend is moving in the opposite direction to the price trend. What does that tell us? Well, we know by using, if you look back at any previous videos that I've done, or certainly I've done a video on the stochastic. If you look now on the screen, you'll see a picture of what the link to the stochastics oscillator video looks like. You can get into that for some more clearer detail. But really, it's an indicator which shows you very strong, clear buy and sell signals. We look for when the indicator is crossed up through the 80% line and then crosses back down through, that's our sell signal. And conversely, we look at when an indicator has crossed down through the 20% and then back up, that's our buy signal. But what we're looking at here for the interbank radar is the trend of the indicator versus the trend of price, and they are diverging. In other words, meaning they're not converging, they're not moving in the same direction, they're diverging, they're moving against each other, which tells us there is bearish signal building. We call this bearish divergence. It means that over time, even though we've had a rally pushback to that, which is that resumption back to the trend, that pullback back to the trend, the signal here is saying, well, yeah, but the trend of the oscillator suggests that there is a decent level of, you've had all your buyers out of the trade now, or they're getting to the end because we're over the 80% mark. We're now looking to break down through. It then gives us three clear signals, which of course is the entry, the stop, and the take profit. Now, what's nice about this trade is it's tight. In other words, you're 1 or 2 pips in terms of your stop above the high of the bar that it's currently on. So you've got a nice tight stop, a good run. You can get some leverage on this trade, and it generally should work very well. If you add in the fact that you are in a downtrend, you're up against that trend. So it's not just the fact on this particular example that you're in a downtrend, and of course the indicator itself is in an uptrend here. What's really important, and it's really important for you to be aware of, is that over time, even if we extend this line out, look, effectively, even over a short period of time, here you go. You've got a nice over steady period over time. If you look at the peaks and the trough, but more importantly, the troughs, which are going to show you that uptrend of the indicator. And then of course, we're looking at the peaks of price to give you that downtrend of price. You've got the divergence. You've got a nice, the reason I look at this one particularly is against that trend, it seems to have worked well. It's consistent with the moving average lines as well. So you've got a nice, and you can also see that the moving averages themselves are well separated, but joining up again. So what we look for is when the moving averages come together and then break away. If we've got the signal where they've come together and then break away, a much stronger signal. If the moving average lines themselves, the blue and the yellow line, are further away, signal's not so strong. So we've really got all things coming together here quite nicely. You've got the downtrend of price, the divergence of the indicator, that's an interbank radar. But price itself is up against the downtrend, and the moving averages have expanded out and then they've joined back together, which you then expect another explosive breakout down. So if I now hit the sell button on here, and let me just bring this up, you can see we have got an entry at 23,921, a stop at 24,591, and a take profit at 23,521. So it knows to enter just as you break through this range here. Stop really tight to the top, which is consistent with the strategy. Very important you're aware of that. Low risk on this trade. You can certainly add more percentage to this if you wish. Default standard is around 2%, but that really is a beautifully set up trade. It's on the Hong Kong 50. Now look, stock indices are really where the action is this year. If you want to know where there's volatility and movement, of course the currency markets we know, but in the stock indices and commodities game, there is some incredible movements which are happening. Anything like an interbank radar on stock indices and commodities, mostly stock indices, incredible moves. So we add this trade by hitting the green button and we expect this to run well. This is now, you'll see half of the screen is now illuminating red, reminding me that I am looking to take a short on that. That's a really helpful thing to do. If you have your screen set out in smart charts, I can now close my screen down, but every time I look at that trade now, I can see that my intention is to be short on the Hong Kong 50. There's a no expiry on this trade you should be aware of. If you want to check that, you go to InterTrade and go into pending, and it'll show you that the one we just added, which is the Hong Kong 50. If you look at the expiry, is not applicable. There is no expiry on this trade. In other words, it will run until it triggers or until it gets cancelled. So I hope you found that to be a useful insight into using the interbank radar. Now the interbank radar, and I'm giving you a bit of a sneak peek of this, is part of the stock indices and commodities program. So I'm going to show you how to access that training in full if you want to access the interbank radar. You click on Learn, and this is where your whole training programs are. So all your foundation training programs, of course, the Learn the Basics course, your Learn Forex course is there, but recently added are the Learn Stock Indices and Commodities program. And if you go down to chapter number 5, which is Decision, and you'll see all of the new trading strategies are hidden there. So if you go, of course, to Interbank Radar, that will give you the full details on exactly how to trade an Interbank Radar long and an Interbank Radar short. So I hope that is of use to you also. So if you like this video, please hit like. If you haven't subscribed to the channel already, get yourself on the subscription list. We'd love to have you, and we produce videos twice a week. And if you like the software I'm using, which I'm sure you do, which is Smart Charts, which is my trading tool of choice, it has all the full examples, it has all of the training, as well as it is a full transformational trading platform. There is a 7-day free trial available in the description of this video. Click that and you can get 7 days doing all the free training. And if you decide you like that as a platform and a training platform and a tool, then you can go ahead and continue your subscription. But until then, we look forward to seeing you on a future video.